Good morning, ladies and gents. Welcome to the Flow Show. Here we are. It's Thursday, the 9th of November, and a bit of a quiet week on the data front, but a few moves going on in the markets. Morning, K-Man. How are you?
Good morning, Ryan. Good morning, everybody. Yeah, we're doing.
Trudging along, as we say, trudging along.
Okay.
Right. Well, let's have a look at what's been going on and seeing if anything's sparking life into markets. We had some CPI data or inflation data out of China overnight, not looking too good. CPI down 0.2%. So last time it came in flat, was expected 0.1, now it's coming in minus 0.2. So not looking too good there. They've been telling us that there's no deflationary spiral going to be kicking in over there. Though the data at the moment suggests otherwise. Maybe we have to see a couple more negative months for them to spark into some rate moves again, like they have been doing, and trying to get things ticking along. PPI, as you can see there as well, coming in not as much as expected, but still down more than last month. As you can see, the month-for-month number there also a negative. So a few problems coming in there. That's probably going to get a few Chinese squawkers out talking about further rate moves, as we heard yesterday. Over in Japan, we've got some rate hikes on the cards. Sumitomo, Mizu are going to raise interest rates on yen deposits, according to Asahi News over there. This is something that has been going on. Previously, there were some interest rate hikes on dollar deposits, as we reported a few weeks ago. There's also been some interest rate rises on longer term deposit accounts, 5 to 10 year deposits. Mizuho are also going to raise their long-term prime rate to over a 12-year high. It's going up 0.1%, and that's over a 12-year high. Shows you the level of rates over there. The long-term prime rate is something that's also used for commercial borrowing and such, but Sumitomo and Mizuho are raising rates on their yen deposits as well. Not big rate moves, as just mentioned. 0.1% isn't a huge move, but it is the snowball rolling once more and getting Japan into a sense of a raising or rising rate environment, small though it may be. What do you think Ueda's going to think about that? It's maybe a natural reaction and maybe one he wants to see, Kay.
Yeah, I think he wants to see some of it. I think it's more going to be important when we see the regional banks as well starting to hike them, right? Because they were a bit in trouble with the zero or negative interest rate policy. But we've already heard from Ueda in the meantime. He doesn't seem to be ready to give up his own snail's pace. But every turnaround has to start somewhere, as they say, yeah?
Yeah, very much so. Even though this one's like trying to turn an old tanker with a teaspoon. It's still trying. And
reminds me of, what is it? The Evergrande, the Evergreen stuck in the Panama Canal.
Yeah, stuck in a canal. Yeah, very much so. BOJ Ueda was out with more comments overnight in Parliament. Nothing that we haven't heard the day before either. He was also speaking at an FT conference this morning, and the headline from that was that he warns that unwinding of their ultra loose policy is a serious challenge, which we know anyway. No real comments there. Just reiterating that it's going to be a slowly, softly approach. We did get the summary of opinions from the October meeting from the BOJ. As you can imagine, not too different to what we've heard in the statements and whatnot. One member said that the chance of hitting the inflation goal is rising. If I recall correctly, it's always been one member who's been saying that. So we need to watch to see if suddenly one becomes more. One member also said that the BOJ must gradually adjust the degree of monetary easing. One member said it's important to communicate to markets that investors need to prepare for a world when interest rates turn positive. So just a couple of comments in there. We've heard some of them before, but as I say, if one becomes many in those sort of that sort of rhetoric, then we can again judge the snowball to be rolling further towards the hawkish side. Over to the ECB, and ECB's Wunsch says it's now less likely that we need to raise rates again. ECB's Lane says the ECB needs more progress on underlying inflation. ECB's McClough says new risks are emerging as others fade. On that, he says there's early signals of the impact of inflation and monetary tightening on borrower resilience, and that's becoming visible among tracker mortgages, personal loans, and certain corporate lending segments. So this tightness in financial conditions is starting to be seen on the ground, and that will keep them in pause if that tightens significantly. ECB's Wojcik says the last mile in the inflation fight will be the hardest. ECB's Nagel, the discussion on when interest rates can be cut is not helpful. It is much, much too early. ECB's Vilroy says rates won't go up without any external shocks or surprises. So firmly closing the door on rate hikes as far as the French central banker is concerned. Our old mate Draghi's been hitting the headlines as well, speaking in the press, pretty downbeat on the Eurozone economy, says it's more than likely that there's a recession into the year end. I don't know what he's doing now, Kay. He's not. He was Prime Minister in Italy until October. I don't know if he's hawking for a job or a position somewhere.
I don't know. He must be consultant for I don't know, a couple of dozens of organizations, probably. Under which I don't know if he's still got his job as a consultant at Goldman Sachs, actually, because he's an ex Goldman Sachser as well. I don't know really what he's doing.
No, but anyway, he's felt the need to hit the press with his opinions. Anyway,
he even said the EU is in danger of falling apart, right?
Yeah. So as a former central banker, he goes into that column of we know what he said when he was in the job, and can say what he likes out of the job. Mm-hmm. So we shall move on. Over to the Bank of England. Bailey says it's too early to talk about interest rate cuts. BUE's Peel yesterday, after he sort of touted a bit of a timeline for when they may look at cuts, towards the middle of next year. He came out this morning saying inflation remains much too high. So he started off a little bit hawkish on the inflation chatter, but then topped it off by saying we don't need to raise rates to bear down on inflation. So he's gone back on the dovish side or the neutral side from that. So it's looking a pretty high bar for the Bank of England to raise rates again. As we know, we've got CPI data, the next CPI data next week, which for all intents and purposes should see a lower number. It'll be a big, big surprise if it doesn't come down. That's always the risk. So that's what we'll be looking for next week. But we get that next week, and we'll see whether the BOE pause is the correct move. Over to the Fed. Feds Jefferson says the Fed must sometimes act despite an uncertain outlook, and that if inflation expectations rise, as we have seen in some of the consumer surveys, like the Michigan and the main conference board number, the Fed may need to respond. So that's his bar for further hikes. Fed's Harker says that rates should stay high as the inflation fight goes on. He favours a steady rate stance, doesn't see any near-term rate cuts. He says it's time to take stock of our past rate hikes and their impact. But then he says the next FOMC could go either way, and they remain data dependent. Going up north, as we say over here in the UK, but up north in the US is Canada. And the BOC minutes or summary was released, and the headline from that is that some officials felt that rate hikes were necessary to reach the 2% inflation target. They discussed whether inflation is becoming entrenched. At the last meeting, they agreed to be patient and hold rates, but that they would consider a rate hike at a later date. Now, I think what saved them from a rate hike at the last meeting was the inflation print just before, which showed inflation coming back down again. But they seem to be, the Bank of Canada, a bit more of a hawkish slant in this summary, and they're sounding a bit like the RBA at the moment, where the hike is pretty firmly on the table, and they're a little bit jumpy in terms of what the inflation does. Reading through those notes, it's a similar situation, that they don't see inflation coming down as quickly as they might like, or it's proven a bit more sticky. So, as I say, a bit similar to the RBA over there, but a hike still definitely on the table from the BOC. Not that there's any move in CAD on the back of that. What did you make of that, Kay? You know, Macklin was a bit more neutral in the meeting at the end, but it's still there for another hike.
Yeah, it is. He seems very reluctant to start to completely change sides, right? He's more back to the neutral, but not yet dovish. Let's put it that way. I mean, as I've been saying a couple of times, unhawkish or a bit more unhawkish, but he refuses to close the door. They don't have the mandate of the currency, but perhaps they are looking at what's happening to the Canadian dollar as well, in a certain way. If you look at the currency, they can actually allow themselves to be a bit more hawkish, perhaps still. But more than that, I'm not going to read behind it. You know, and it's very hard to tell those. But let's say that they are perhaps among the majors, the slower ones of wanting to completely go on hold, right?
Yeah, very much so. A bit, as I say, they're a bit jumpy. They're a bit short-termist, aren't they? You know, reacting with comments after each piece of data rather than, you know, taking the longer stance.
Yeah.
And I think that's going to create the volatility for banks like the BOC and the RBA. You know, you get another hot CPI print and they all turn hawkish again. So yeah, it's just it gives it a bit of volatility, short-term volatility when you get those data points, which is good for our trading. So long may that last. Anyway, right. Speaking of rates, and we know we're playing the rate cut game now, but one thing also to consider is where people expect rates to come down to. Remember, no one, well, if things go according to plan, no one's cutting rates back to zero. They're just bringing rates down to a more normal level. Goldie's thinks that the Fed's normal level, or its terminal rate, is around 3.5 to 3.75%. So these sort of calls are going to be something to factor in the rate cut game. We're not expecting, you know, rates to be cut by 5% or from 5% down to zero. We're talking about maybe 250, 300 pips a clip, pips of cuts to get rates down. So, you know, the rate cut cycle won't be as big as the rate hike cycle, potentially, unless economies really do fall off a cliff, and then you can talk about rates back to zero and all the rest of it. But for the meanwhile, we're playing the rate cut game and where those rates are going to come down to. And Goldie's nailing their colours to the mast on that one. Also, one for your calendars. Fed's Mester, one of the big hawks. She has to mandatory retire in June next year. So the Cleveland Fed are putting out job ads for her position. So we've got a few more months to go yet, but she will be on her way in the middle of next year. And if you're removing a big hawk, you need to know who replaces her, be they dovish or hawkish.
Or where to send your CV.
Yeah. Yes, well, send your CV to the Cleveland Fed. The only experience you need is, I don't know, a calculator probably, and some seaweed in your shed for your economic forecasts. But anyway, yeah. You applying, Kay?
What is that? Milwaukee?
Yeah. What's the weather like in Cleveland?
I haven't got a clue. It doesn't sound like a tropical paradise, so I think I'll pass.
Yeah, Brian. I'll ask you. You're here. What's the weather like in Cleveland? If it's warmer than here, I might apply myself. But anyway, yeah. And lastly on the list, apparently Biden and Xi are going to prepare talks to restart military-to-military channels, which sounds good news on paper. It's better than not or keeping those channels closed. So anything that eases the rhetoric between those two countries potentially good for risk. Are you in Cleveland, Brian? You got warm weather until tomorrow.
No, I don't think so. I don't think so.
No. Oh, here's Rick.
Rick.
You're waiting on their phone call. They don't have a hockey team. Okay, Cleveland's not bad. All right, I'll do some googling. I'll see what the weather's like. Right, that's all I've got on the headline front. Kay, anything crossed your radar?
Did you speak about the ECB quarterly bulletin out this morning?
No, I didn't bother.
That was on a pretty weak one in its globality, actually, because they talked about the risks and also acknowledging that inflation is coming down. So that was overall a pretty weak one. But for the rest, it's been ultra quiet again.
Yeah, unfortunately, there's not a lot to spark life into things at the moment. The data
today, right? We have Powell again today, yeah.
Yeah, we've got Powell later on speaking at the IMF on monetary, the effects of monetary policy or some such other crap. So maybe a bit more interesting than what we got out of him yesterday. So yeah, that's later on. I will be well in the pub by then. So all yours.
And we have the 30-year bond auction. Yesterday's 10-year. Oh, perhaps worth mentioning. Yesterday 10-year was a bit underwhelming, but there was like one factor in there is that there was a pretty big take up in the context of everything. It wasn't really a really good one, but there was a bit of foreign interest in there, and that reminded me of an article that I read a couple of weeks ago saying that the Japanese lifeless pension funds could go back into a bit more unhedged foreign bonds, which may somewhere be one of the reasons for the dollar yen to see those sustained bids without too much of a setback. But I've also seen that perhaps China was in there as well. But yeah, I mean, it's just worth mentioning that we still have quite a bit of bond issuances on and coming up and upcoming as well. So this 30-year auction later today may see a bit of a wobble in dollar, although yesterday it did not really impact the dollar too much. Just want to keep an eye on as usual. And then we have an avalanche of other speakers as well. Lagarde is there. The Vice Chairman Schlegel of the S&P is there as well. But
Rogers,
I mean,
POC.
The thing is, overall, the market is becoming numb to all the speakers unless they come up with a new line. I think the market pretty much knows where the central banks are at right now. So we're really waiting for data, I would say. Those claims, as we've seen, those continuing claims creep up. They may cause a stir, but not even sure about that. Looks to be that perhaps waiting for Powell or even just taking another day off.
Yeah, I think we need to keep a bit of a close eye on these continuing claims, which have been trending. The only real number trending higher in this data set. initial claims have been 200 to 230s. That's not a big deal, but this has just been creeping up for the last few weeks. So keep an eye on that, just in case it continues. But yeah, plenty of speakers to come later on. On the price front, not an awful lot happening. Let's come down. Need to come down into some short-term stuff. Euro dollar's just waffling around, really, not doing an awful lot. It got back above 107, held it all through the night, and now it's had a little bit of a shakeout this morning. I was actually short up into the fix yesterday because I thought this move might have been a bit of a fix move, but typically I got out of my short this morning for a couple of pips lost because I didn't like the look of it, and obviously we've come down now. I said in the chat room, if you want to go short the euro, now's the time to do it because I've just closed mine, and there you go. Some pips on the table. I'm still core long from down below, so no big deal on that one. But yeah, it's just we've got a bit of a situation where it's a bit undecided now what we're going to do. We've got some definition showing up, 106.60, 107.60, but this really still remains my pivot line, 107. If we hold below, it looks a bit more bearish. If we hold above, it looks a bit more bullish, but you've got to take into account the edges of this short-term range and then your levels thereafter. So yeah, pick and choose your scalps in this one. It's a similar story around a lot of the boards at the moment. Nothing much inspiring to pick out. Our old mate Aussie Kiwi down at the old friend 108. We've shown this level time and time again. The magnet level in here keeps coming back. Bit gutted. I got high ticked out my shorts. I was short 109.20s in this move up here, and then had it on a tight stop at 40, and the high was, I think, was 42. So and then we're back at the thing. So even when you get it right, you can get it wrong. Just where you place your stops and your risk. But never mind. We always move on to the next trade. So yeah, back at the 108 here. Maybe we'll see what happens. Maybe we get another look at the downside. I have put this wedge on. I'm not a big wedge fan. I'm more inclined to look at the horizontals, but it is what it is. If it just shows that we're narrowing the range either side of this line, that can give rise to the possibility of a break. But if we break out of a wedge, then I'm more interested in what it does when it gets to some of these horizontals. So I use a wedge just as a bit of a guide to see that the range is tightening up, because when it tightens up, it means it's likely to spring a move one way or another. But how far that move goes, I don't know. But here we are at the 108. So sit on your hands or do what you want. Trade it either way. I'd either wait for a move back down to the lower ranges or up towards the higher ranges again before thinking about this one. Yen pairs are still looking pretty well. Euro yen is looking pretty bullish. Some of the others are they're there or thereabouts. Yen is another one. We've had another little break above 151. Now it's happening again. So it's still on the grind, not giving much back at all in some of these moves. But we're just having another go at through 151. Going to be watching up here to see what happens. I would have to say, I think it's, if I have to pick a side, I'd say it's more likely we get a break up finally than we do a hold, just based on what we're doing in this. But we could get up there if there is trouble into here, decent resistance into here. Again, I might have a look at another little short just to play the top there. But it's the same old story, isn't it, Kay? It's too high to buy, and you can't get any pips if you short it.
Yeah, that's it, mate. I mean, we've been talking about that already a number of times. It's exactly that. I mean, and again, that's where I'm happy that I can trade options, because you can trade them around if you have a bit of movement, which we had at the start of the life of the option. Yeah, I mean, reasonably speaking, there's no way of chasing those yen crosses up here. But then if take away the MOF, I mean, there is absolutely zero reason for it to start to buy yen either. Or
Yeah.
even with the numbers, because I think, did we have the current account out overnight, which was
We did,
last?
I
Yeah, we
believe.
did, right? Which is actually pretty healthy again, which in a normal time should have been a bit yen positive, and yen can't even take any comfort from it. So no, it's that issue right now that UEDA put us in this situation, and the combination of UEDA, the government, and the MOF put us in such situation that it's very hard to trade. And really, if you buy yen, you're betting on intervention. That's the thing. But going to chase it here, as we've been already saying a number of times, it's a bit ridiculous. I mean, even though I'm still my overall and my long-term feeling is for the yen still to go much lower, but that's we have to wait for interventions to get better levels, I think. We've seen again at the end of last month, people were trying to play the long yen game versus another one where the interest rates are not too high yet, which is the Swiss franc. It lasted for what? For a small week, and then we were already back to levels where we were before. And that's unfortunately the case. When you're long yen, you need to take your quick profits and run and wait again.
Yeah.
That's just the way it is right now in yen, and there's not much else to say or to do about it.
No, you've got to be very picky. You've got to be very picky about your entries, and you can't be wrong for too long, because
No.
it's going to cost you pips on the trade, and it's going to cost you pips on the costs. So we have this high. It may not last. We may just power on through 152. We're off to the races. But at least you've got something up here to base a trade on potentially. If you let's go in, because it's obviously we're showing we've got the double top here. So if you want to short this pair, that's the level you want to look at.
Yeah.
151, 70s, 80s, 90s, 152. But if you threw 152, 20, 25, you're wrong.
Yeah, and then Murphy's law says that it's going to go above 152. You're going to stop out, and a minute later they intervene. And
exactly.
That's the thing. And I'm not even joking, right? I mean, it's just the way things could go, because I can't see how MOF is not being nervous. If you look at the trade weighted index of the yen, is doing low after low after low every day. But the dollar yen is not accelerating. So there's very conflicting signs there.
Yeah.
And that's why I'm saying there's no way to really, there's no optimal trading yen right now if you're, unless, as you say, as I'm doing, but not everybody has this possibility of doing when being a retail trader, unless you're in options, and then you can actually do something sometimes. But in cash, I'm really not interested to start to get involved in anything. There's other currency pairs which are much more lively, well, relatively speaking, lively, where there is more perhaps an opportunity here and there to do something.
I think that's the crux of it. We talk about dollar yen because it's an important currency, obviously, but I think right at the moment there's opportunities elsewhere, and maybe this one, you need to leave alone and wait until you get better levels, or something's changed or something's moving, and you get to see what's what.
Yeah.
But
I've had those periods when we were the other side of the coin, when Japan was firmly in deflation. I've had the opposite, and days where you sat there, and I was market making yen, so I mean, got very frustrating at times, where the dollar yen was literally ticking down a pip or 2 pips every couple of hours, and just like leaking lower. And this is the feeling that it gives me now to the opposite side. Is just like ticking up, but If you go against it, you just bet on one or the other, or interventions, or one or the other big hedge funds saying like, okay, I'm going to take my profits on short yen, and it's going to trade 60, 70, 80 points lower in a flash. Everybody's going to get nervous. You do another 30, 40 points. Everybody thinks, yeah, this is it. You sell in the hole, and then you're looking at a loss again. So it's one of those pairs where, honestly, I wouldn't touch it with cash right now.
Yeah, very much so. Right, well, let's have a look. A couple of the others. Aussie dollar looking a bit touchy again. We're down at the 64. This might be a bit of a do or die level for this one. I'm still long a little bit. I don't know whether to close it off or just let it go, tighten the stop up a bit. But yeah, we're back down here. So this bounce, this move up above 64 is running out of puff fairly quickly. Again, you can use this one as your pivot level. If we do manage to hold it, you've got sort of 63, 90, 95 as your final bit of line in the sand. If we get below there and hold it, then I've been saying that this doesn't look like it's over yet. There's not enough support evidence after this low to suggest we've properly bottomed. I need a bit more evidence. So not holding 64 will suggest we're going to get a move down to test these lows again, and then we can see what happens. So it might be a case of just setting your parameters a bit wider rather than trying to get a bit picky in the middle. But yeah, it's certainly looking a little bit more bearish than it was last week or so when it was looking fairly strong. That's all it takes, a couple of days to change the picture, and things look slightly different. Looking at some of the commods, oil still looking very weak. We didn't obviously get the EIA data to counter or add to the API data, but it matters not. Oil still looking very weak, and that's having an influence, obviously, keeping the pressure on the CAD and CAD pairs. Gold as well, that's looking a bit weaker now. We're through whatever support we were sitting up here. Mine was around 60s, and OK is around 50s. We're through all of it right now. So the next area is the 30s, which has been a former traffic zone, as you can see, in and out, support resistance, as it likes. So that's going to be the next important zone for gold on the downside, at least. Already looking like it's starting to resist around the 50s and into the 60s. So got to watch that further. Again, if you're not in a trade, if you're looking for something to do in gold, then if you get a hold 50s, 60s, it stays below that area, then if you're not really short, that's the side you want to be looking at. If you are short, 30s is where you got to look at maybe taking some profit off the table if trouble pops up there. And conversely, for longs, there's your area if you want to try and catch the knife. You don't need to be a hero. If you're through, 30, then you're likely wrong, and we're heading down, and probably down to 1900s on that one. Kay, did you want to grab it for a few?
Yeah, just one thing, don't jinx it on gold. I'm short. Hello? Did you hear that? Ryan?
Sorry, what did you say?
I said, don't jinx it on gold. I'm short.
Oh, you're short. Okay, I'm not. I don't jinx anything, mate.
You already jinxed the euro dollar this morning.
Oh, you knew that. That was one of those trades. As soon as you close it, it's going to go your way. It's
right.
Like if I'd have stayed in it, it would have been trading 107.30s.
Yeah.
It.
Do you see my screen?
Yep.
This is where we are, and I wanted to show it to the community because I think we are. I'm not far from having invented the new four-letter word. We are in FOBS mode, fear of being stuck, and this is exactly what's happening. Because if we look at the interest rate differentials, you can turn it as you like. We are pretty much stuck right now, and we were talking about that when the US yields were starting to turn. those differentials narrowed, and then the euro dollar went up, cable went up, well, all of them went up, but we are gradually coming back to differentials where we were basically before. I'm not going to show all of them, but if you look at even you compare the comparable, like the tens, for instance, sterling yields have been coming down as well. We are in a bit of a support zone there. You look at the Canadian, that must have weighed a little bit on the Canadian dollar as well. The Canadian yields went through a support zone here. And if you look at the width of or the height of this move, they're actually dropped a bit faster than the rest as well. So I think that was what Ryan especially was talking about before, where the McClem friends were pretty hawkish, that the market tries to reprice this as well when he shed a little bit of his of the hawkish tone, and then all of a sudden the Canadian dollar also came under pressure, of course, helped by lower energy and commodity prices. Aussie bond yields, they are holding slightly better, the Germans as well, but they did pretty much what the US did, but they're still holding above a little bit of a support zone. So there's perhaps a bit of hope for people who are a bit longish Aussie, that in through a cross also, that there may be some hope still. But if we start to break under 445 for 440 on the Aussie, then it's probably going to weigh on the Aussie dollar as well. And I was already mentioning that yesterday. Even the Japanese yields came down. There was actually a pretty decent 30-year bond JGB auction overnight, which the Japanese long term went to it. I wouldn't say en masse, but still they went to it, and saw an article, read something about them saying like we're coming to yields where it's starting to get interesting. If you imagine that Bank of Japan hasn't even started to normalize, but they are already happy with the yields that they can grab over there, because they have been starved for yields for a decade or two, as we know. Yeah, I just need to show this because I'm yesterday I thought there was a bit of a chance that we started to break down. I'm perhaps slightly too optimistic saying that we will have an oil type of move lower. It's not the same market. There's not exactly the same people as well, although there is some overlapping and stuff going on. But I do think, yeah, this zone in the 60s is one, but I think that prior 53, 54 had to hold, which was a bit of a high here as well. And we are through that. So on the really short term, I think there's a possibility that we are going to see something in the 30s. Or if really, and this afternoon, perhaps the Americans, if they don't want to trade much else, perhaps they could have a little bit of a go at those levels. We may see this cluster again, that's anywhere between 1920, 23 and 1900. Right now, I'm not even thinking about what could happen if it can go lower or not. I don't think so. I think if we get a washout, this is probably a washout move, just like we had in oil. We're probably going to base somewhere here. But anyway, that's what I'm trying to play now. Managed a little bit around, doing the slice and dice method. So I'm just my stop is just above here somewhere now. Nothing can happen anymore to this position, so it's a bit of a free ride if it goes. Silver, same thing. Tried to bounce, but we are slowly getting back into this 22 and a quarter, 35 zone that we saw before. It's holding a little bit better than gold in today's markets. So again, interesting zone here. Yeah, cable is back on the move. We had a bit of a move up in the cable. It's all small stuff. We had a little bit of a move up in the cable. We are again turning around this 123 zone that we spoke about already before. That's really going to be, it's somewhere your middle area. This 122.70, 123 give and take figure 10, where we may see a decision if we get back below. Probably going to have a look at the low 122s. If we get above and hold back into the mid 123s or the high 123s, but for the time being, as we have been seeing on those differentials, there's not that much to do in those dollar markets unless Powell gives us something to shout about. And I'm in similar position as unless you're out. Are you still long Aussie dollar, Ryan?
Yeah, long a little bit.
Yeah, me too. But I don't think we are going to survive this, mate.
No.
It looks like we are the next one below 95 figure. we can be taken out, but it's a cheap one anyway.
Yeah.
It's just playing the hold here and see what happens. That for the Aussie dollar. I'm not going to look at much more. One more thing. Today we have Banxico, okay? And we also have the CPI in Mexico out in a Mexico CPI is in about 3/4 of an hour, and then we have Banxico later tonight in 7 or 8 hours, okay? We are turning around a few levels. Keep an eye on, it's a bit far away now, but keep an eye on what's happening. First of all, again, around 1740. We had a bit of a drop down below, but we held this 17.25. So those are your two levels on the downside. If Bank of Mexico continues to be at least neutral towards hawkish, I'm starting to be a little bit in doubt. So we have to look at the top side as well, because other EM currencies are doing a little less good, the rand amongst others. But watch what's happening if we start to go towards or break above 1780.85. Get a confirmation through 19 there. It's probably going to go back up to those higher levels if Banxico is starting to turn around. Now, they are expected not to change anything. If they keep the rates at 11.25% and are neutral, then I think with what's happening in the equity markets and stuff, the Mexican peso will still shine a bit. But be careful, because other LATAM central banks are starting to cut rates, okay? And they are much less hawkish than they were before. So your first indicator will be the CPI. Bit similar kind of stuff on the Euromex. We are trading above this bit of a trend line, but well below the 1895, 1905 zone. This is going to be your point of measure to the top side. If Banxico starts to be dovish and or even start to talk about rate cuts, for instance, then there's a chance that we are going to go at least have a decent look of that zone and perhaps go back up. If in turn Banxico keeps a rather hawkish stance or very neutral, not too dovish, and keeps their rate unchanged, then it's very hard. It's a bit the opposite as the from the Japanese yen, right? It's hard to be short an 11% currency. So if they keep their stance and they keep the rates, then perhaps we are going to have a look back down, and then I would argue that we can have a look back down in this zone here around the 1840s, 50, something like that. And I think we can leave it there, Ryan, for me.
Yeah, thank you very much, mate. Good stuff as always.
What is Angela saying?
Sorry?
What is Angela saying? Oh, in the cable. All right, short, yeah. All right, yeah. It's rejected well above the 123, right? Yeah, indeed.
Yeah, good stuff, Angela. Hope you bank plenty of pips on that one. Right, so yeah, well, sorry again that there's nothing too much inspiring on the price front to look at, but you know, the trades are there if you've got the patience to wait for them. You know, just don't go chasing it if you don't feel like there's nothing there. Just, you know, go do some revision on data and whatever, get yourself up to speed, go mow the lawn, whatever. Just have your levels ready that you do want to trade, and if you get them, then have a go with them. That's what we have to do. And on that, we shall call it a day. Have a great day. Watch out for power later on. Thank you to Kay and all the guys in the background for getting the show on the road. And thank you to you, our viewers, for supporting us here and coming and watching us. Have a great day, everyone, and we shall see you tomorrow.
Hello.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.